Hey everyone, Big Markets Think Simple here. I want to introduce you to the most boring company you've ever heard of. No tech, no AI, no shiny new products. This company sells exactly one thing: rocks. Literal rocks. They dig up the ground and sell what comes out. And yet, over the last 5 and 10 years, this stock has outperformed the S&P 500. Annual revenue, $6.15 billion. No semiconductors, no apps, no EVs, just rocks. The company is Martin Marietta Materials. Fancy name, ridiculously simple business. But hidden inside that simplicity is a monopoly so powerful it would make Apple jealous. By the end of this video, you'll understand exactly why the rocks under your feet are someone's endless gold mine. Let's get into it.
This video is not investment advice. It's for educational, entertainment, and informational purposes only. I'm not a financial advisor. Please do your own research before making any investment decisions. Any investment decisions are your own responsibility.
So, what does Martin Marietta actually do? Imagine building the world's biggest Lego castle. What do you need most? Not the cool flags or the knight figures. You need millions of basic bricks just to build the walls and the floor. America needs the same thing: roads, bridges, highways, buildings. And the basic bricks that build all of it? Aggregates. Crushed stone, sand, and gravel, stuff pulled straight out of the ground. Every sidewalk you walk on, every highway you drive on, every AI data center going up across the country, none of it gets built without this material. And here's the wild part. How do they make it? No lab, no chemistry, no R&D budget. They just blow up mountains. Drill a hole, pack in dynamite, boom, giant boulders come flying out. Feed them into a massive crusher that grinds them down, like a pepper mill, but the size of a building. Crush it big, use a railroad ballast. Crush it medium, concrete aggregate. Crushed it fine, sand. Mix in some tar, that's the asphalt on your street. Sounds simple enough that you're thinking, could I just buy a mountain and do this myself? Maybe. But Martin Marietta does it bigger than anyone in America. In 2025 alone, they produced roughly 200 million tons of aggregate. How much is that? Enough to build the Empire State Building over 500 times. And here's the twist. As simple as this sounds, almost nobody can actually compete with them. The reason why is one of the most airtight business moats you'll ever see. The whole business comes down to one rule: nobody buys rocks from far away. Think about it like water. If there's a store 1 block from your house selling it for $2, you're not driving 30 miles to save 50 cents. Aggregates work exactly the same way. Rock is heavy. Shipping costs more than the rock itself past a certain distance. So construction companies always buy from the closest quarry, period. That means this isn't a national market. It's hundreds of local markets rolled into one. Supply is locked. Demand is surging. You can already see where this is going.
So what does a near monopoly actually get you? Simple, you set the price. Martin Marietta runs what they call a value over volume strategy. Used to be sell as much as possible, now it's charge more per ton. In 2025, volume was up about 4%, but price per ton up 7% because when construction companies have nowhere else to go, they pay what you ask. In fact, some years volume barely moved, but revenue and profit kept climbing. The raw material is literally free, it's already in the ground, so every price hike goes almost straight to the bottom line. Warren Buffett's favorite kind of company, one that can raise prices through inflation and still protect its margins. That's exactly this. And the location of these quarries couldn't be better. Martin Marietta is concentrated in America's fastest growing regions: Texas, Georgia, North Carolina, Florida, the Midwest, population booming, factories moving in, cities expanding, AI data centers, semiconductor fabs, infrastructure upgrades, all happening right where Martin Marietta's quarries already are. Oh, and it's not just rocks. Mined outland gets redeveloped into housing our parks. They also extract specialty magnesium from seawater for pharmaceuticals and electronics components. One rock, zero waste. Most construction materials companies get crushed in a downturn. Volumes drop, pricing power disappears. Martin Marietta, local monopoly, prime locations, already permitted. They weather cycles better than almost anyone in the sector. That's how a rock company beats the S&P 500 for a decade. Let's look at the numbers. 2025 revenue, $6.15 billion. For context, that's roughly what Spotify pulls in globally. Spotify has 600 million users, a massive tech platform, and licensing deals with every major label. Martin Marietta has a mountain and a crusher. Revenue grew nearly 9% year over year in 2025. 5-year average about 8% annually. But here's the real story. Profit. 2025 operating income, $1.43 billion. 5-year average growth, 14% per year. Operating margin, 23.4%.
Put it this way, sell $100 worth of rocks, keep $23. In the construction materials industry, that number is extraordinary. Why so profitable? You already know. Monopoly pricing on a product that cost almost nothing to source. And what do they do with all that cash? They don't just sit on it. Dividends go up every year, and they've been buying back billions in their own stock, which means fewer shares outstanding, which means your slice of the pie gets bigger automatically, without doing anything. Run a local monopoly, return cash to shareholders aggressively. Hard to argue with that. Revenue over $6 billion, margins that rival software companies, and a management team that sends money back to investors like clockwork. That's the real reason the dullest stock in America has been one of the best performers of the last decade. So what does the future look like? The tailwinds are massive. The biggest one, digital infrastructure requires physical infrastructure. AI data centers are being built everywhere, and they need rock, concrete, and asphalt to do it. Martin Marietta CEO said data center-related aggregate demand jumped 60% year over year in Q4 2025. Then there's the Federal Infrastructure Investment and Jobs Act, IIJA, which hits its peak spending in 2026, the year the shovels really go in the ground. Add reshoring, semiconductor and battery plants coming back to American soil, and demand in the Sun Belt just keeps stacking up. They're also getting smarter operationally. Autonomous trucks, AI-driven production analytics, better efficiency across the board. But there are risks. Housing is the soft spot. Residential construction makes up 20 to 25% of demand, and high interest rates have kept it roughly 20% below pre-COVID levels. That's a real drag. The IIJA expires September 30th, 2026. If Congress doesn't renew it, federal construction spending could fall hard in 2027. And if materials costs keep climbing, that IIJA budget buys less and less in real terms. All right, let's land this. The world is obsessed with AI, quantum computing, space, and those things are real. But here's what we forget. For the digital world to run, someone has to dig the physical foundation. Martin Marietta looked at the thing nobody wanted to talk about, rocks, and built an empire out of it. Monopoly by geography, pricing power by default, a business so simple it almost feels like cheating. The strongest companies aren't always the flashiest ones. Sometimes the most dangerous company is the one you can't replace, selling something you can't live without at a price only they get to set. A pile of rocks just proved it. If you found this useful, subscribe, hit like, and turn on notifications. See you in the next one.